Hey, it's Mac with PriceActionTradingSystem.com, and it is Monday. It's December 4th. This will be our chart lesson for the day. And starting off looking at our daily chart, this thing looked like it was going to really sell off today, but we recovered probably more than half of that sell off. Still closed down considerably, but notice we closed outside of that um, this tight channel here. We did still close outside that. So could we bounce tomorrow? Absolutely. Will we? We'll just have to see. This market it's mostly going sideways. If we do a measured move here, you can see we closed a little outside that on Friday, but today we opened inside that, right at that. Opened and traded up to it and turned down, but we closed in the upper half, as you can see there. So I don't know what this thing's going to do. It's still mostly sideways, although it was a very bearish day and there was no news today or anything like that. I mean, there could have been, when I say no news, I'm saying there's no scheduled news item. There could have been some news thing or something that spooked the market. Um, there's a couple of negative things going around out there. There's a big, huge real estate company in China that was about to go bankrupt, and I think that's probably what was driving this. And I think they got some reprieve to the end of the month, to the end of January or end of December, maybe into January. They're still not out of the woods, and if that thing defaults, I think it's going to hurt a lot of banks based on what I read. And there's some other things. There's still all the other stuff out there that's negative that's been hanging over the market for a while. So, most of the pundits are calling for this thing to go higher, and of course it's been going up. So just don't listen to the news. That's the key. The key is follow the price action and do what the price action tells you, and just don't listen to those guys. If they're right, the price action is going to show us it's going up, and if they're wrong, the price action is going to show us it's going down. So just don't listen to the news, and you'll be miles ahead of everybody else. Just follow the price action. Read see what the chart tells you based on the way we've taught you to read it, and you'll be miles ahead of everybody. But we'll see what tomorrow brings. If we get any follow through selling, I still think the path of least resistance logically is down, but the market's never logical, so it could just keep going up. So don't fight it, don't argue with it, just whatever it does, go with it. So that's the way I'm going to leave it. That's the way I'm going to play it. So we will wait for tomorrow and we'll see what comes. Um, but yeah, what looked like was going to be a super bearish day just turned out to be a semi-bearish day, I guess is how I would leave it. There was a big gap at the open. I'll show you that. Let's just go ahead and flip over to the other chart. Okay, here it is, our chart. And you can see we had two legs down, but we didn't quite get a measured leg. We found a lot of support down here, and it came back some before selling off just a little. So we didn't quite make that measured move. And usually when that happens, you get a big rally. I mean, this is a pretty good rally. We took half of that sell-off back. But the thing is, we closed way up here at this red line on Friday. We opened today at this yellow line. And generally, if the market's going to have any strength, it's going to fill that gap pretty quickly, usually within the same day. Well, there's actually a gap here at the open, but there's also the gap between where we closed and where we opened at 8:30. So there's two gaps on this chart, and we didn't fill either one of them. Really, you have to fill both of them at the same time to fill them. And this market was not able to do that. So that's a little bit of a bearish sign that there's still some bearishness hanging over this market. But anyway, let's talk about the chart. You can see we had this blue channel down. We had a break way back here. I originally had this a little steeper, but we never had a retest. So I believe that I'm sorry, I originally had it a little flatter, and I included these two swings in there. After the end of the day, when we never came back, I kind of re-looked at it. And of course, you have this tighter channel here with a failed break where we overshot it way down here. So I think what happened was we had this spike down, and then we went basically it's just a spike down from the gap on the open, and then we went into this channel, and I believe I had this a little too flat. I steepened it. It still fits really real nicely like it is now. And then and it gives us a break and a new low, and then we get this spiking channel up with the break, and we did make the new high before selling off into the close. So I believe this to be correct. I think my original channel was a little bit too flat, and I just steepened it a little bit. And I didn't have this drawn this morning because most of this didn't really come into play. There was one trade up here, but most of this didn't come into play. It was a little bit early, but so I didn't have that on there. Really, you could see that with your naked eye. At least, hopefully, you can. It's probably if you're really new, you may not could. But once you get good at this, you can see most of this without even putting it on the chart. I always tell people, put it on the chart. I always put it on my chart. I may not draw all of the very micro ones because I can see them, but I usually try to draw them as I go, just so I don't have to redraw them later in the afternoon. But every once in a while, I'll add a few things late in the afternoon that I left off because I could see it basically. And you don't want your chart to get so cluttered that you get confused. And I want to say this, and I want to get on to the chart lesson. But where a lot of people make their mistake is they're trying to box this thing into the rules and say, okay, I got a channel. I'm going to go short every time until I see a break, and then I'm looking for a retest. And you're really trying to structure it too much for that. You got to relax. Maybe I don't want to say relax the rules because you really don't, but you want to relax what you're thinking there and following. And, you know, the market doesn't always do what we think it's going to do. 90% of the time it'll follow the rules, maybe 95% of the time, but it's not 100%. It's really like basically this chart speaks a language to us. But it's a language that's in a broken, it's like, okay, let's say this is a Russian speaker here or a Spanish speaker or a French speaker, and they're speaking to us in English, though, and they're not really good at English. They speak broken English. And that's what we're seeing here. It's not clear, perfect English. It's like broken English. And you have to learn to decipher it. And that takes time and experience. And so it's not just perfectly clear until you get a lot of experience. But if you've ever had a friend or somebody that you knew that speaks broken English, that you probably know that after you've listened to them talk for a long time, you start to understand what they're talking about. When the first few times you heard them, you couldn't understand half of what they say. And that's the way this chart works. I hope that's a good way to explain it. That's the way it feels like to me, and it feels like a way I can explain it where people can grasp it, or at least I hope you're grasping that. This chart speaks to us, but it's not perfectly clear. You have to learn to interpret it and hear it, and you're somewhat interpreting it just like you would if you talk to somebody with broken English. They can usually speak enough to get the point across, but not every word is perfectly clear, and not every phrase comes across perfectly. Sometimes you have to understand the other language a little bit too, and then it makes perfect sense to you. And that's the way this chart is. So you're kind of learning to speak understand broken English, and maybe understand some of the Russian words or the Hispanic words or Spanish words or French words if they're speaking it as if they were speaking it in broken Russian or broken Spanish or broken French or whatever, or the fluent side of that other language. Hopefully that makes sense. Hopefully I'm not confusing you. But anyway, let's get to the chart lesson. But you follow the chart. Don't listen to what anybody tells you. Don't listen to the news. Don't only do what the price action tells, and you'll be miles ahead of everybody else. But it was kind of quiet. There's a lot of movement here, but there just weren't many setups. The market would go sideways and then spurt in one direction or the other, and you didn't really get a good safe setup. There's a couple in here, but late in the afternoon there was a real clear range here that was fairly easy to trade. We were just going sideways, and so there was more afternoon trading going on than there was anything else. So it's really quiet most of the day. So if you struggled to find a good entry today, well, it's probably because there wasn't a lot of good entries till real late here on this real clear channel. or range, I should say, not channel, I'm sorry. But let's zoom in and we'll go through the trades here. But hopefully you saw this early smaller channel here, and I mean that's a real clear trend line, and you get a second entry here right off the trend line. I mean that's as good as it gets. And if you catch this one trade, if you were trading early this morning at 7 o'clock, there's another setup here right off the key entry point, but it's just the first entry, and you do have this, clearly have the green channel working out. Let me zoom in a little more here. And that's a little dangerous taking that one. There's a hidden second entry there. Maybe you take that trade, but that early in the morning, I would just wait and see if you get a true second entry or a lower high. And lo and behold, right off the trend line, a few bars later, it is a little sideways there, but you can clearly see that trend line in play, working down. And that's a second entry short, right off a good signal bar. I'm going to take that trade every time. And you can see, if you take that one trade, this is a gimme all the way to the bottom till it started correcting back to the EMA. So that may be the only trade you needed today. And I mean, if you just go till it breaks outside and breaks above the next bar, well, there's almost 20 points. There's $1,000 on a single contract. That's all you needed for the day. I mean, that trade is as good. I mean, that's a clear, precise setup. Yeah, it looks a little bit congested, but you can clearly see it working off that key entry point. I'm going to take that trade every time. And boom, that's the trade of the day. And what it is, it's a spike in a channel that goes into a real tight channel. Now, we've talked about this before. If you're good enough to recognize, if you see these corrections that only go for a few ticks, that cannot, and it's clearly off a trend line like that, and it has lots of stems and little dojis and things like that, that is a really strong trend right there. And so any signal bar that comes back and sets up, you can just about go short on, or if it was going up, go long on. And you can see if you'd have taken any of those, it was down to, it was really right about here that you start to recognize that this is a real strong channel. So there's one entry, there's another one, there's another. These are more advanced. These are not for people that are just learning to trade. It's for people that can recognize this stuff and have seen enough of my videos to understand this type of a real tight channel that's really a real strong sell-off. And really you don't get a break in the end. It just hits the other side of the channel and reverses. And I told another trader this, even though this is a pretty good trend coming back, you just can't trade. Don't trade this. You're better off not to trade it. I don't see a really good setup, except there's a second entry right here, but look how congested. There's resistance. You could get burned there. Maybe there's a high or low here, but the signal bar is this one. And if you wait till here where you get a pretty good second entry here, there's still not enough room. But if you took that, you probably get burned. And then it goes right back where you thought it did. So just wait it out. And then finally you get a break of that channel, a move to a new high, and you get a good short. Because this is what I was waiting on, for it to come back to this main key entry point. And I drew it here first, and I moved it up here. Like I said, I made this a little steeper, but you still come to the same conclusion no matter how you draw it. I like going short there. Plenty of room back to the EMA. It's just a first entry, but really what you could call it is a failed break out of that little channel. It broke out the bottom first, failed, went higher, and then broke out the top and failed. It makes that little 2-bar matching high. Just go short right there. And you can see there's been 2 trades, and either one of them would have made you a nice profit with a runner. This one would have got you, if you waited on that candle outside, that one would have netted you $275 on a single contract. Not quite what you would have got out of this other one, but still really good trade. And there's only 2 trades we've had, but they've been pretty straightforward. You could call that a triple test. It's really just a little failed break higher, and it really makes a double top there as well, basically. This one went a slightly higher, but you get the 2-bar matching high, which gives you a little more encouragement to go ahead and take that trade, even though it makes a slightly higher high there. Because many times you want to wait on a lower high here. But this was a main key entry point, so any setup up here, notice how it closed back in the channel too. That's another thing that I liked about that. If it would have closed outside this channel, I probably would have made that one green and waited on a lower high, which never came. And then you're just chopping along here. There's no real setup here. It drops down, same thing, dropping along, no setup there. So unfortunately, you don't get a chance to catch this next really strong leg down until here. And again, you're just chopping along. It's the first close outside this little congestion area. It's the first close outside the trend line. Technically, this is the same thing as the second entry because there's a leg up, and then there's a two-legged correction and another leg up. So this is a little more advanced, but you could look at that as a second entry, even though technically by the count it's probably a first, second, third entry. But it's still a failed break out of the channel, and we're expecting a retest of the lows here and prices to go lower, and you've got enough room to get out. And again, that's a quick, easy move. And then you're just chopping along here again. There's another setup here, but there's not room to get out. You see how many times we bounced. You just can't risk that one. Even though it went lower, you can't risk that one. You need room to get out first, inside, before it gets to the support. And then here we're doing the same thing, but here you got room to get out, and you got a little 3-bar matching high. Again, it's right at the trend line. We've already had a break in a new low, but this channel's been pretty consistent. I think you can take that trade, and I think it got just enough to get you out, and then it bounced. And again, you don't want to enter long into this stuff. This one is tempting. There's a second entry here. I don't think there's enough room to get out. I mean, there just is enough room. Maybe you take that trade. I mean, we're making higher highs, higher lows here almost every time, but we made higher highs for the most part, but here we made a little double top right before we made a little double bottom. So there is room to get out. I'm not crazy about that. It looks a little congested. And this has been a strong downtrend. We weren't anywhere close to the measured leg yet. So this thing could trap you and go lower. So I wasn't crazy about it, but I will mark that green. Once you got up here, there's a little more information telling you, hey, you got a good trend line. You got a trend up. Maybe we've reversed. And you get a first entry, second entry right there. So if you draw your little channel, there's no break, but with it being off of that proven key entry point, I'm probably going to take that trade regardless. I guess you could say you got a break outside the new low all in one bar. There's a higher low here, but not room to get out. Then finally you get a failure here because this is a new low. It's a new swing low. It's lower than that last one. So that's a first entry, second entry short. It bounces right off the key entry point. Relatively low risk, 4 ticks. You could argue for this to be blue. I just made it green because it was such a strong downtrend before. But this is close to being blue. It's very low risk. Technically, you have to add another tick or two because you really needed to put your stop below this bar because it makes the swing low. But the failure occurred here, and you're trading a failure. And that's more advanced. That's for your more advanced traders. If you're new to this, don't worry about that trade. You wouldn't take it. Shouldn't take it. If we'd been a little further away from the EMA, maybe you take this trade, but there's been no break of the trend line here. It's been proven a few times. It's really congested. It's just we're so close to the EMA it could bounce easily there. This thing ends up going lower. I don't think you want to go low at the low of that bar. It breaks higher and turns down. It's an engulfing bar, but this is a range. And you don't want to go short right into that, which we'd be actually going short one tick below that. Yeah, maybe the downtrend's going to start back up, but there's no proof of that yet. So I just think you have to miss that trade. And then you get another move up, and you get a close outside that channel, and you try to go higher once, twice, and it fails. So you could almost call that a triple test, but it's a failed second entry long. And I like going short there. We tried to go higher 3 times and couldn't, and you're looking for a retest of this low. There's another lower high here, but you can't go short right there in the low. And then it bounces. And you would be looking for a bounce here, but I'd want a higher low, and you just don't really get one until over here. Finally, you get a triple test. It's look how flat the EMA's got, and you triple test. This went slightly lower, and there's not a ton of room back to the EMA. Once you're going sideways, you're not too worried about the EMA, but we hadn't proven this at the highs completely yet. This actually moved up a little later to right there. So I made this one green. It closes inside. I like that trade. I'd probably take it, but it still is a green one because it did make a slightly lower low there. But again, it closed inside, and we bounced there 3 times. You're probably going to get a scalp out of that, but sometimes those will fail on you. Same thing here. You got a triple test across the top, closes well inside. There's plenty of room to get out. The problem here on this one is it does make a slightly higher high, and you've made 2 higher lows with a little double bottom. So we hadn't been running top to bottom, so you can't really count this whole space here. You only have this space. I still think it's probably worth considering. If you wait on the lower high, it comes right here. And again, we had just bounced there. I went back and forth about whether or not to make this one green or red. It's real close. I like that trade since you've turned down there 4 times and you got a matching double top there. Market that can't go higher is eventually going lower. And when it comes back here and gives you a lower high by a couple of ticks and a big bearish bar, I really like going short there. So again, this one close, you could argue for it to be green. And you might even skip that one and just, if you didn't take this one, skip this one and wait for the next one, which is right here. And then once again, we come down here and test again. So now you got a triple test with equal lows and plenty of room. I like that one to go long. And that pretty much takes you into 230. I don't see anything after that. So this was a fairly consistent range. It made it a little easier to trade. It's too bad we didn't really get a setup here. But we didn't. There it is. That's how I saw it today. Again, don't listen to the news. Don't listen to the pundits. Don't listen to what they say. They're all calling for this market to go higher, and they could be right in the end. I'm not going to say they're not, but I'm just going to tell you they don't really know. They're just guessing at things. They get paid to tell people the market goes up, and that's what they do. Everybody wants the market to go. I want the market to go up, but I just think it's I just don't like what I see on the charts, and I don't like what more than that, I just don't like what I see in the economics. There's a lot of negative stuff floating out there, and any one of them could turn out to be a huge bomb to the market and send it racing lower. And that's what scares me. But we won't guess at it. I could be wrong, and they could be right, or they could be right, wrong, and I could be right. It's you just don't trade what you think. You trade what you see. And so stick to that, and you'll be a lot better off than most of the market, because most of them are listening to those idiots, and they'll do what they say. And sometimes they get it right, and more times than not, they don't get it right. So then they tend to make the news up based on what the market's doing. And so if you go back to that daily chart, this thing was looking really, really bullish until here. And it's still the bigger move days have been bullish. So that's probably what they're all basing their information on, because it's been rallying. The odds are with you if you stay with the trend. So, but we've been way over. We were way overbought up here. We've relieved some of that, but it wouldn't take but one more rally day and we'd be overbought again and could sell off. We could be trying to retest these highs, and we're not far away, as you can see. If you draw this line across those highs, we've gotten real close. Wouldn't take much, 4,800, 4,700, and we would have a retest of the highs on this channel after this break. So that could be our target, a new high, and then it could go racing down, or it could just continue to go up. we'll have to wait and see what the price action tells us and what the market does. But just sit tight, follow the price action, trust your reads. If you're skilled at this, trust your reads. If you're not skilled at it, keep practicing, keep working on it until you are skilled, and just don't listen to the news. I don't even read it anymore. I used to get up. I tell this story a lot. I used to get up every morning at 5:30, go work out, and I'd have the news Bloomberg going in the background. I was trying to gain any kind of information I could, and that was such a waste of my time. I mean, the working out was good, getting up early and working out. That's not a waste of your time. It's good for your health. I try to stay in shape best I can. Um, I want to, if I live long enough, I want to be healthy. I don't want to be old and decrepit and ill and sick and all that. So I do try to stay in shape as best I can. So that is important. But listening to those guys in that news is a waste of your time. Don't do it. Just forget it. I never turn it on anymore. I mean, sometimes I never even look at it. When I go on vacation, a lot of times I don't even know what the market did till I get back because I don't listen to that mess. It's just a waste of your time, and it taints you, and it puts bad ideas in your head, and most of the time they're wrong. Every now and then one of them's right, but most of the time they're all wrong. So anyway, this is long enough today, almost 30 minutes. I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.